Hi, welcome back to our first time buyer series for people who are looking to buy their first home in the UK. If you haven't already, please remember to subscribe and to hit the notification button to make sure that you don't miss any of the other videos. If you haven't seen the other videos in this series, please check in our playlist because we have a ton of stuff specifically for first-time buyers all around the whole property buying process. Everything from mortgages to saving your deposit, stamp duty, everything you can think of to help make sure that you're clued up and confident as you go into getting your first home. So in today's video, we are talking about what does it cost to buy your first home? Like, what is it that you're going to need to be able to save so that you can actually get on the property ladder? And we're going to break this down because you have these major upfront costs that we need to think about in advance. And then you have obviously ongoing costs once you're in the property. So we're going to split it into those two sections and make it nice and simple. So major upfront costs. If you are thinking about buying your first home, or maybe you've been saving for a while, you're going to be really aware that the main thing that you're going to be saving for is that deposit. And so if you are buying a property, you're probably going to have to get a mortgage. And the way that it works is that you have to put down a certain percentage of the value of the property, and then the bank lends you the rest of that by way of a mortgage. Now, at the moment going into 2021, you are going to need to have at least a 10% deposit unless you're looking at Help to Buy or some shared ownership properties. And actually, a lot of lenders are asking for 15 or 20% deposits right now. If you're at the start of your savings journey, don't panic. 20% of a property can seem like a heck of a lot of money to save. But hopefully we're going to start seeing more 10% mortgages come back on the market. And so if you just start thinking about, okay, for my deposit, I'm going to focus on saving that 10%. And hopefully by the time you've saved that amount, things will have come a bit more back to normal post-pandemic, and you're going to be able to be okay getting a property with that 10% deposit. So 10% even is a lot of money. If you are buying a first property that is £150,000, that means that you're going to need to save £15,000. If you're buying a property that is £250,000, then you're going to need to have saved £25,000 just for your deposit. So deposit is like the biggie. It's the one that generally takes a couple of years to be able to save. Completely normal that it takes you a few years. That's the same for everybody. It feels long, but actually once you get started in the process, the time will go in no time. Deposit is the biggest one, and so what we recommend is we have a free to use calculator on our site called Homefinder, and it will walk you through all of the calculations so that you can see what type of property value you can afford, what level of mortgage you're likely to get, and then critically it gives you this savings target number and then tells you how much you would need to save per month to be able to hit that deposit amount. So deposit is the biggie, but it's not the only major upfront cost. We also have to think about whether stamp duty is payable. Now, stamp duty is a tax that you pay if you buy a property. We've done a whole separate video on stamp duty and how you calculate it, so be sure to check that out. But basically, as a first-time buyer, if you're spending less than £300,000 on a property, you don't have to pay stamp duty. But if you're paying more than £300,000, you do. And you could pay up to £5,000 additionally on stamp duty, and that's on top of the deposit amount that you pay. So some people have in their minds that they just need to save that deposit amount, and that's not quite right, because there may be additional big costs that you have to think about, and stamp duty is one of them. Okay, so you may be paying, you're definitely going to be paying your deposit, or whatever percentage that is, and then you may also be paying up to a few £1,000s in stamp duty as well. Then you have to think about some of the additional fees and costs that come with the process of buying a home. And we have a separate video where we walk you through that process so you understand what the steps are, so that you're kind of clued up in advance about what to expect. But in terms of some of the costs, they are things like mortgage fees. So when you take out a mortgage with a bank or a building society, they charge you some like admin type fees on top. So one of these is a valuation fee. This is basically the lender looking at the property to check that A, it exists, and B, that it is worth what you're paying for it. So you will have to pay a valuation fee to your mortgage lender, and that's going to be something like between £150, anything up to maybe like £1,500. So generally, the lower the value property, the less you're going to pay in the fees, but it does depend. So it's something that you want to check with your mortgage provider how much those fees are going to be. Your mortgage lender might also charge you some other admin fees, and these can range up to a couple of £1,000s for what's called an arrangement fee, which is basically you paying them for the pleasure of giving you a mortgage and going through all of the paperwork, and then sometimes also a booking fee. So when you're speaking to your mortgage broker or you're looking at different mortgage options, be sure to check out what the mortgage fees that are payable, because those are typically paid up front, so at the time that you take out your mortgage. Now, some mortgage lenders will allow you to add those fees to your total mortgage amount. Generally, we would recommend not doing that if you can help it, because if you add them to the total mortgage amount, that means that you're going to be paying interest on top of the actual amount over that 25-year period. So it can end up costing you a lot more than if you're able to pay it upfront. Although, of course, we do understand that sometimes it can be hard to find that additional money upfront. And so in that case, being able to add it to the mortgage might make sense for you. Okay, other upfront fees. So we've talked about deposit, stamp duty, mortgage fees. The other ones you need to think about are solicitor's fees. So the person who helps you with all of the paperwork so that you actually legally own the home is going to charge you for that process. Now, how much your legal fees cost depends on a number of things: how complicated the property sale is, where in the country you live, that kind of thing. So it's a good practice to shop around if you can, to find a solicitor that A, you trust, and B, that charges you a reasonable rate. But you should expect to pay anywhere between £750 up to a few £1,000s. And you'll also have to pay for the solicitor to carry out some property searches. So that's them checking that the property exists on the register, so it's properly registered, and them checking things like sewage issues, any contaminated land. They go through a whole range of searches that they do to make sure that there aren't any major issues with the property before you buy it. So that's going to cost you between around about £200 to £300 or £400 for those searches on top. And then the final upfront cost is if you need a survey done on your house. So normally when you buy a property, you want to make sure that it doesn't have any hidden nasties in it. It isn't crawling with like woodworm, it doesn't have any damp, it doesn't have any structural issues, the roof's not caving in, all of those kind of things. And you can either choose to have a more basic level survey, which is just called a home condition survey. And that is the surveyor going around and basically checking that most things are there and they work and it's not completely collapsing and falling down, but it's not a full structural survey. A full structural survey is where they go and they do a lot of detailed checks. So they might go up onto the roof, they might go into the loft to check, they'll test bits of wood and stuff to make sure that you don't have any problems, because they're going round to each room of the property and each element of the property, checking that it's in decent condition, and then they write up a long report for you pointing out any potential problems that you might face. So the price difference kind of reflects the amount of work that the surveyor has to do. So if you go for a home condition survey, so the more basic version, you're looking at a couple of £100 for that. If you get a full structural survey, you should expect to pay upwards of £600. And obviously, the bigger the property you're buying and the more work they have to do, you'd expect to pay more for that. Also, if you have a very old property or a listed building or something like that, then you would expect to pay more because it's more likely that there could be problems because it's older. And then the final kind of upfront costs that people often forget about is you've got to move in. So you're going to have to pay for removals. And you're gonna need some furniture. So unless you already have existing furniture, you're gonna need to put some money aside in order that you're not just sleeping on some boxes and you've actually, kind of got somewhere that you can sit down and sleep. Although the good thing about buying a property is you can either get some stuff secondhand or people can always lend you some bits whilst you're finding your feet and getting the right stuff. So you can kind of do that bit over time. But you should just be thinking about at least possibly having the basics, maybe like a bed and a sofa. So those are the main upfront costs. And then of course, you're going to have ongoing costs, not just the mortgage payments that you need to pay to the bank every month, but also things like property maintenance. And the rule of thumb for that is that you want to kind of put aside maybe 1% of the property value each year to be able to pay for maintenance. If you are buying a property in like a shared block of flats, then you'll often pay a service charge, which is a fee that you pay every year, like into a pot for all of the properties in that block. And then you collectively use that amount in order to do any repairs that are needed to the building. So you need to make sure that you've got enough money on an ongoing basis to cover not just your mortgage payments, but anything that you might want to do to the property to keep it in good condition or to improve it. And then you're going to have insurance costs. So when you take out a mortgage, you have to take out buildings insurance. So I think like a lot of us, if we rent, sometimes we might get insurance for our contents, but often not. We take the risk. But when you actually buy a property, it's usually a requirement of your mortgage that you have what's called buildings insurance. And that is to insure the actual structural property against things like flood or fire or any type of like natural disaster or something that would mean that the property didn't exist or was really badly damaged or something like that. So your bank is going to make you take out buildings insurance when you actually get your mortgage. And then you might also want to get contents insurance at the same time to protect the stuff that you buy, particularly if you're going to start buying more expensive things, items of furniture, TVs, that kind of thing. And then of course you're going to have just your standard running costs of the property. So your council tax, all of your utilities, all of those kind of bills and things that you've probably already been paying if you're renting, but just when it's your property, you're gonna just find that you might be paying a bit more. If you're moving, say, from sharing a house with other people, all of a sudden you're going to be responsible not just for your share of those bills, but for the bills for the entire property. So it's just something to bear in mind to make sure that you are able to kind of afford all of this on an ongoing basis when you're thinking about what type of property to buy. So these are the costs. As you can see, unfortunately, it's not just the deposit that we have to save for. There are a lot of other things that we need to take into account. As we said at the beginning, if you use our Homefinder calculator, we do a lot of these calculations for you and give you a nice round number to help you work out how much it is that you want to save overall. And we give you a helpful breakdown of that with your plan. So please do try it. And we look forward to seeing you for the next episode. And thanks very much for joining us.